I'd much rather be in the end room because I don't like being this high above stage. It's just terrible. Well, I'll tell you what's not terrible is catching up with all of you on a regular basis to present our financial results, along with giving you a business update of how we've gone. And I was talking to somebody the other day about accountability. The moment that we had investors that invested within our business provided a different level of transparency but accountability to others. And it's a rock for your back, because most of us have all been in business for ourselves or worked. And when you are truly bound to somebody else, it provides such a meaning. And you have all provided us a meaning to make sure that we meet our obligations to all of you. And that's first and foremost. So one of the questions that I get asked, are you worried? The economy, the news, what's happening? Wow, 29 years now of lending and collecting money, 16 years since we've borrowed money from investors for the very first time. I can assure you, I am always worried. I say to the team, we want to be remembered for all the right reasons. So that weight, it never leaves me. I can assure you of that. So I'm always worried about how things are going. But one thing I do know is after 29 years, it provides us opportunities. One thing that we've been very good at is looking for market segments and people that we can serve. And that's really important. The customer base that we operate in, we serve. We provide them an opportunity to obtain finance, but we offer them a flexible opportunity if they require it at times to go into a repayment schedule. So we have, because of our investor base, a different funding structure that we'll talk about that provides us that flexibility to be there for that customer base. And we proved that through COVID. I was talking to Armando and Lou before, and Armando was saying, how's things going and all the rest of it. So we've decided, Armando and I, we're going to go and help our friends overseas because we've got no battleship, so we've got a rowboat. If anybody wants to join us, we're going to represent Australia. And then Armando, quick as a whip. All our investors are quick as a whip, just quietly. And Armando says, but we've got no oars. And I said, I've got one paddle. And he goes, that's okay, I'm not greedy. You can have it. Wonderful. Just wonderful to be a part of your lives, and thank you for your support. I don't take it lightly, and like I say, I just won't let you down. I want to talk about another highlight. My best mate in the whole world is my wife, and she's kind enough to join me today. She is a rock. So, you never get 2 weeks ahead of yourself. You never get too arrogant. She keeps me grounded. She's the love of my life. She's been a constant within my life forever. We've got 4 beautiful kids, and I owe so much to Deanne. You are a rock star. Thank you. So for those investors that are either here for the first time and want to know who are we or what do we do, and also for the existing investors, are we broadening our horizons and how do we operate? We raise capital. So I mentioned there before, 29 years of lending and collecting money. That's what we do. We lend money. That's the predominant part of our business through Finance One. Our competitive advantage in the marketplace is our capital structure. It's our investor base. So we've got Investor Central. It's an unlisted public company. So we're not listed on the stock market. So this is important because you go through times of uncertainty in the market. We are very certain that we will meet our obligations to you. We will move heaven and earth to provide you the certainty that you're looking for through an investment. But Investor Central, we're not worried about meeting our share price or anything like that. We meet our obligations to all of you. It owns the brands of Finance One. So Finance One does consumer loans and commercial loans right across Australia, providing predominantly motor vehicle finance, but it's not limited to that. So our commercial range of products looks at mobile plant and equipment, assets that any business may need to propel their business forward. So that could be a tree lopper that's looking for a wood chipper, all, you know, those kind of assets, which is important. We're not only funded from our investor base, who ranks first, but we also have 2 lines of credit from large banks. One's Barclays Bank, so we've got a line of credit from them for $300 million. And we also have a line of credit from Nomura, which is another Japanese bank, for another $300 million. So, but they do not have a lien over the Investor Central Group. You rank first. That is set aside through a securitized asset-backed security, where we call it our securitization program. So any loan that we write and put into that pool, they have a lien on, but they do not have a lien on the overall group. All right, so that's really important, and that's different from how we've organised it to others as well. Provides an additional layer of protection. The nice thing about that, though, is all the profits that come out of that securitisation facility flow back through the group and add more equity back into the company to provide more protection to our investors. 29 years of lending and collecting money, I was asked, can you collect on our behalf? And finally, after COVID, so we bought a collections company called Commercial Credit Control and launched Strategic Collections 4 years now. So we do that on behalf of others. It has been a small part of our business. It's not the largest thing that we do, but it's becoming quite good. So when we paid $1.8 million for that business, this year we will make over $2 million net profit before tax. Also, I want to talk about the mortgages. We'll talk about that in the future. So we continue to broaden our range of products to be able to help more people. But we do it in a meaningful way. And I've said to a couple of investors as I go around, one of our favourite sayings is bullets before cannonballs. Anything that we do, we test, we measure, we don't launch a cannonball, we make sure that we understand that industry sector. It's no different from the collections business. For 4 years we've owned that. We've been very patient, very methodical in our approach to growing our organisation. Our loan book, as it stands today, is just over $718 million, and it was up 16%. Of that, the securitisation part, which I was saying the larger financiers, there's 2 facilities totalling $600 million of 322. Our investor capital, it's now over $400 million, but as at the half-year report, it was $394 million, and we settled in loans $212 million. We paid back to our investors $19 million in interest payment just to our investor group. And we have over 28,000 active customers with a current loan. That's important too. So the risk is spread. It's not just Townsville. Less than 3% of the business is in North Queensland. So we look at different industry sectors, different demographics, and we've spread that risk through 28,000 active customers with a current loan. Our total income was $78 million. It was up 13%. Our interest expense to our broader investor base was $30 million. Our total expenses was $68 million, and our net profit before tax was down $10.5 million. And our loss for bad debts and provision was $11.8 million. And we have, as at the end of December, $74 million of equity. So that's real tangible money that we've earned and reinvested in the business that you ranked before in preference to be paid. A couple of things. We have been very purposeful over the last couple of years talking about our different industry sectors to move up that credit curve because we've seen what was going on in the economy. So we're looking for better customers to put onto the books. And with those better customers, we've got a smaller margin. So we've taken the hit, not you, as in not a hit. We've refined our lending policies to look for a better customer to make sure that we can meet our obligations, and we're making a smaller profit through that. That's fine. But as we continue to grow, those profits will benefit from that in the future. Also wanted to talk about, this is our bad debts and also provision for doubtful debts. So as it stands today, we've got just under $32 million set aside for our provision. So we've added to that because we want to also make sure that we're covered for our mortgages side of the business. So we're taking a very cautious approach. And when Darren talks about the business, he'll show you that loss curve. So you can see that loss curve, it's trended down over a long period of time. We've seen a small uptake of people wanting payment arrangements, which is fantastic because we want to enter into those payment arrangements with people, but the business is very strong. And we've been very cautious about how we make sure we go through this next cycle looking for more opportunities. We processed 19,700 applications for finance just for the last 6 months. We settled 7,900. So we take a very cautious approach on who we're trying to look for. We're a high documentation lender. We get 3 months worth of bank statements on a consumer loan, depending on the credit quality of that, and we get 6 months if it's a commercial loan. We also look at tax portals. We do the diving in to make sure that we understand somebody's credit worthiness that we can give a loan to. We don't rely solely on the broker network to provide us the client. They don't make the decision. We make the credit decisions internally. And I mentioned there before that we had 28,000 customers and $200 million of loans that have settled. I want to talk about the residential and commercial mortgage part of the business because it's a new part. Darren was kind enough to let me run it. It was just like, oh yeah, thank you, Darren. All jokes aside, one thing I do know is picking credit. So I'm looking over every credit application that comes into our organisation, and I've been a part of this business from day one to making sure that the brokers, right, we've only got a select few brokers that we're doing business with. We want to make sure that they're sending us the right style of customer, that they're not masking the system as well in an ethical way. And then I'm looking through every applicant. So I've seen 69 applications and we've settled 12. So we've got 12 active customers on the book. When we see the residential and commercial mortgage part of the business, so what we're doing is, if we looked at a commercial customer, there's so many commercial entities that it's really tough at times to get money from a larger financier. So what we are able to do is being able to ascertain somebody's credit worthiness, but also the asset, and it's only a short period of time, those loans. So probably circa of about 6 months that they stay on the book. We've already had a couple of loans that are already paid us back. So then we're able to provide a service to a customer that's appreciating the loan. Yes, they're paying more. They're paying around that circa of, we're looking for a return of 12 to 14% on that, but it's a short period of time, then they go and refinance with somebody else. It's great. There's a real target market there. When we look at the residential mortgage part of the business too, what we're looking for is somebody, we don't want to compete with the banks. We're not interested in writing loans at 6 and 7%. We write loans around that 11 to 12% for somebody. But again, it's somebody, it's like me. In the early days, I just could not get a loan from the bank because I was in small business and all those kind of things, but I never missed an interest payment. I never missed a payment. So I had to go through an alternative lender to buy my own house. And we are no different. So we provide that opportunity for somebody to stay with us for a short period of time on their feet, and then they refinance it out. Works well. This is fantastic. Why is it fantastic? Because we have been consistent on our approach to our investor base, but also the discipline of running our business. The bottom slide shows our growth on profit, net profit before tax over a 10-year period. One thing I've learned about finance companies is making money is foreign to a lot of them. They have these massive loan books, but they don't make any money. It's just crazy. So not only have we made the money, but then we've reinvested it back into the company. And I just want to point out COVID too. So like now, we're in front and we're giving you a business update. We're cautious about our approach. COVID was no different. We completely stopped our lending so we could manage and meet our obligations to all of you. And we don't care if our profit goes down. What's important is returning your money. We've never missed an interest payment, ever, and we've never missed a redemption on maturity. But those profits continue to grow. I want to talk about our investor base, because it's you. You have grown and helped us grow, along with the loan book. You are a mainstay of our business. Please stay with us. We appreciate your support. Now, I'd like to introduce, if you haven't met, Darren's been with us for 3 years. He's our CEO. He's my boss, and I'm on eggshells about delivering a level of service to him. Do you know he gave me a 3 out of 10 as a score? Can you believe that? 3.5 out of 10. I'll be better. Darren.
Thank you, Mark. Thank you. Hands up if you believe, Jamie, that I'm his boss. All right? No? Oh, what? D? Yeah, that's fair enough. Fair enough. Thank you. Look, it's great to be here. And I'd say it's a great privilege to be here. I've been here in the role for 3.5 years now, and to never get tired of hearing the story of where the business has come from. Where are we at today? So what we want to cover up today is a bit more about the business model itself, and most importantly, what's in front of us. There's so many opportunities in front of us right now, as Jamie touched on. The world, uncertain time right now, but we believe that presents some great opportunities for us, provided we maintain some discipline there. And we've always built the business on an unwavering commitment to our investors and our customers, and that's what has set us apart, and that will continue to set us apart. Also, we just want to welcome, we've got Ernst & Young here today, Nathan and his team. I appreciate them coming on board. So we've updated you last time that Darren from Jessets has been with the been at Audit for a long period of time, and a tremendous partner to us over a long period of time. But I'm really proud, and I know Jamie and the board is really proud, that we made the decision to change auditors, which we saw and I see as a great position of strength, and the fact that the group has diversified over a long period of time and warrants an audit partner at the quality of Nathan and his team. And it's been fantastic to have them in, and we've really encouraged them to look under the hood, understand this business, and they've been up here for the last few days and in Brisbane for the prior weeks. And I think it's a real feather in our cap to have an audit partner of that quality helping us moving forward. So just a bit about the group. We are a diversified finance group now. And I think a lot of that is sometimes lost on some of our employees as well. The vast majority of our employees see themselves working for Finance One, but we have 3 distinct arms of our business now. We raise capital through Investor Central, and that has become quite a big part of our business, and the sophistication that comes with that, not only from the investors with yourself, but also the work that Ashish, our Head of Treasury, is here today working with Nomura and Barclays that Jamie mentioned before. And we're always talking to new funders, because capital is critical to our ongoing success. So working on relationships on an ongoing basis is absolutely critical. The Finance One business remains strong. I think that's what's amazing to us. It's remained strong through real disciplined approach. And what I'm really proud of, and Jamie touched on it earlier, is our debt recovery business has really grown. We've been very sensible with that, and it's just reaffirmed how important it is to take a conservative approach. And Jamie said bullets before cannonballs. And the way in which we've approached that business is not dissimilar to how we're approaching the mortgage business and other asset classes that we're looking at from time to time. Our product suite, it's never been wider, which is exciting, because in these moments now where perhaps lending might be a little bit more challenging, the fact that we've got multiple different products allows us to operate in areas where we traditionally wouldn't have been able to do. So it is an exciting part. We've got an asset finance business. The mortgage lending, Jamie mentioned that he's in charge of the mortgage business. I thought it was fascinating how excited he was to be given that privilege, which was great. But one thing I want to say, and all jokes aside with Jamie doing that, his depth of credit knowledge, it's market leading. And when we're talking about loan sizes, that could be from $2 to $5 to $7 million. I'm sure you can appreciate having someone with the depth of knowledge to look over that transaction has never been more important. Commercial lending, it's an area that we've talked about for quite a while. We see some greater opportunities in that space as well. And I touched on the debt part of the business. So we've truly got a diversified product range now, and that's going to position us really well for the future. Importantly, we still distribute largely through the broker network. That 92% of our business comes from brokers, and the remaining comes from direct, like repeat customers and using our brand. Why is that broker network important? It's because in the mortgage world, in which we're expanding into, 70% of all mortgages are originated through brokers, right? So we've got a great network of brokers ourselves who would normally be probably doing some mortgages themselves. So it gives us a great opportunity. There's no point having products if no one's aware of them or no one's buying them. And the broker network is integral to us getting our name out there. I think what's exciting for us is that we haven't gone out there and told the market that we're doing mortgages at all yet. It's just been a very select, I think we've got 4 or 5 brokers at this stage that we've just been dabbling with, and we'll slowly expand that. We've recruited a new head of mortgages who's been with the industry for 20 to 25 years, and he has an incredibly good reputation, and we're very lucky to have him. But we haven't unleashed him yet. So we haven't unleashed Jamie, we haven't unleashed this gentleman called Doug, and we haven't unleashed the product to the brokers. So we're going to do that slowly, but when we do, the volume will no doubt come. The market opportunity, I think what we've been talking about the last couple of days as a management group is that through these challenging environments, and I'm not here to pretend that I know what's going to happen. We're talking at our table there. If I was asking what's happening with Trump, if I knew, I wouldn't be standing here, that's for sure. So who knows what's going on there? But what I do know is that there's going to be some uncertainty, and uncertainty brings opportunities for companies like us, companies with strong balance sheet, company with an ownership structure that is reinvesting profits, right? We've actually, as Jamie mentioned before, we've got near on $32 million of provisioning set aside. We've got $74 million of retained earnings. We've got $90 million of cash in the bank right now. That's all very conservative positions to ensure that we trade our way through whatever challenges may approach. But we see huge opportunity. The banks are continually tightening up, and our lenders in our normal space, our asset finance space, are also tightening up. So if they're capital constrained, that allows us to grow sensibly into other areas. Flexible credit solutions. We just simply say to our customers, we're a solutions-based lender. Basically, give us a go to have a look at it. Right? We can have a product sheet, but all we ask is, send us a loan, we'll have a look at it, we'll treat the customer with respect and dignity, and if we can find a solution, we will deliver that. We'll deliver that with speed, and we'll deliver that with confidence and respect back to them. And that's been the cornerstone of the business for the last 16 years and will remain that way no matter what segments we go into. The opportunities that sit in self-employed and SME lending remains strong. The banks are really having trouble lending in that space with confidence, and we see some good opportunities for us to expand there. Jamie mentioned before our disciplined approach to arrears management, but also putting better quality customers on the books. This slide represents that. So that's dating back to FY19 through today. You can see that steady decline. This is the one number you want to see, a declining trend. That just shows that the work we're doing to attract better quality clients and manage them through the various cycles has led to the arrears going down. Why is that important? Well, obviously it means you typically lose less money on through those customers, but also helps funding, right? Our funders look at these particular charts and they want to see that we're appropriately managing credit risk. Now, credit risk is not just collections, it starts with the appropriate assessment of loans. So we've made a real concerted effort over a long period of time to book better customers on the books. Jamie mentioned that has impacted our half-yearly profits because we've done that. We've focused on those customers. But as we go through this, potentially a trickier period, decisions we've made over the last few years will pay us back as we go through this period of time because better quality customers should have a better ability to trade their way through difficulties that may arise. We talked about diversified funding. I really like this slide because, the fact that there's $74 million of retained earnings, we don't take lightly. I was just saying to our team before, the fact that we're not listed, and Jamie mentioned, it's so important because I've been in listed businesses where the share price decision, it shapes decisions you make in business. You've got to chase the share price, chase and keep shareholders happy. The good thing about Jamie and Dee's ownership structure is they're prepared to take the long play. And as an employee and an investor, and that is so comforting for me. And also I think the fact that we've got a real good spread now between investor and securitisation. That diversified capital is the greatest asset that we have in this company. It allows us to play in areas where others can't, and it ensures that we're well protected in any downturn. Strategic Collections, as Jamie said, we purchased that business 4 years ago. It was one that was seen as a bit of an opportunistic investment at the time, but we've now diversified away from collecting on behalf of others into buying debt ourselves. Okay, so we, as a contingency collector, we collect on behalf of some major telco companies, and then we've now deployed some capital to actually invest in buying our debt. And we've done that over the last few years, as evidenced by the blue line there. You can see the revenue in that has increased. As Jamie alluded to, bought the business for 1.8, and now this year alone is going to make 2 million, and that's going to continue to expand. The good thing about this particular investment is that it's a great diversification strategy. If lending becomes more difficult over the coming months and years, which it may, inevitably what will happen is more people unfortunately won't be able to pay, and more debt becomes on the market. So right now what's happened is we've got no shortage of opportunities to buy debt. There's a lot out there. The good thing as a buyer, the more debt that's available, the more you can be sensible and price correctly and sensibly grow this part of our business. So it's a true diversification part of our business, and is going to become a more meaningful part from the group profit over the coming years. And I'm really excited. The team in Gold Coast have done a tremendous job. And one thing I just want to call out is we have pitched that business as Investor Central, not necessarily Strategic Collections. Why that's important is because the reputation Investor Central has, and the discipline that we've had on our balance sheet, and the long-term support from investors like yourselves, has what enabled us to build credibility in that segment. Right? They look at us at a different lens than just another debt buying agency. They look at us as a diversified financial group, and strong brands like Latitude, AGL, Origin. These companies are coming to us now saying, "We'd like to partner with you." It's a real feather in our cap, and it's a great opportunity for us to grow that moving forward. So the growth strategy. I think it's important to say that these are the opportunities for growth that we have. But as Jamie's touched on before, it's only where it's appropriate to do so. There's a lot of other companies in our space who are growing their settlements, but not profitably. So our goal is to always maintain profitable growth. We see a good opportunity to expand that mortgages. We've talked about that very slowly, but I think in the coming years you'll see that portfolio size increase quite a lot. Distribution, we talked about broadening the broker base that we use, scaling that commercial lending, and growing our funding capacity. Cash is oxygen, as you all know, as great business people like yourselves. It's oxygen. And we'll never apologise for taking a conservative stance on keeping that cash that we do. Because who knows what might present itself in the coming months. There could be some acquisition opportunities. Who knows? We don't know what could come of it, but what we want to make sure is that with a good capital structure, we've got options. Right? Options to grow our lending, or options to acquire some other businesses like we did with commercial credit control 4 years ago. So with milestones wise, we want to get to that $1 billion as soon as possible, because we think that's sensible business. That's the business we know well. Right? In regards to the mortgage business, we're at $69 million at the moment for the mortgage book. We see that getting to about 100 mil by the end of this financial year. And in the next year, that could be $200 to $300 million. Who knows? But the opportunity is there. But we see our core business going to $1 billion, and that will be a major milestone for the business. That's it from me. I just want to pass back to Jamie, but thank you again for your ongoing support. We cannot do this without you. I think what you never take for granted, because we don't, that your funding allows us to do things that our competitors cannot. And that is the greatest competitive advantage we have, so I appreciate your ongoing support.
What I truly value about Darren is that he cares. He's got his own capital invested in the business, and he not only cares about the stakeholders, our investors, but he cares about my family, and it shows through his everyday activities and the way that he conducts himself within our organisation, that I'm very grateful for. Thank you. So broadly, we're a finance company providing people an opportunity to access finance where they may have been excluded before. We offer fixed interest rates from 5% through to 9.5% at the moment. Some of our investors are asking, look, RBA rates are going up. Will your interest rates go up in the future? We don't lock our rates with the RBA. We're independent away from that. What I will say, though, is we want to be very competitive in the industry sector when it comes to your investment. We want to provide you a return that you don't need to go elsewhere. We want you to have a balanced investment portfolio. We do not want all of your money. It's really, really, really important that you have a balanced investment portfolio, and we're only a small part of that. When it comes to interest rates, though, we've absorbed some of that ourselves by making sure that we've reduced some of our margin to look for that better creditworthy customer. So I ask if you could work with us into the future, because I want to try to keep those rates around that moving forward. We feel, and we don't know, but we feel interest rates will probably come up another peg or two, but there is a very good opportunity, a very good chance that those will come down next year again. So we'll come up, the life cycle, and then they'll shoot down. Why would you invest with us? We want you to gain an understanding of our business model. There's full transparency of our financials so you can understand the money that we do make and how your returns are safe. You rank first in preference to be paid. There are no management fees to maintain an investment in our company, and our investors love the monthly returns that come back. Computershare is a share registry, issuing a share certificate in our company, and we pay a fixed interest and a fixed term, providing that certainty. This is why you rank first in preference to be paid. So with our Redeemable Preference Shares of $367 million, you even rank above my teammates and I for our own capital that we've put back into the business. So I mentioned there before, our teammates can invest through a special team member offer, and you rank ahead of them. So they're putting their capital at risk. And there's $27 million. So it's not only my teammates, it's my money that I have through the preference shares. It's Darren's money. It's all our board of directors, and it's any of my teammates that wanted to invest through that offer. So we're certainly backing ourselves. Notwithstanding that, then you've got to get to the $74 million that we've put in as retained earnings to reinvesting all those profits over a long period of time to protect all of you. So we are subordinated behind you of over $100 million. Our fixed interest, we encourage people to come along, put a toe in the water from $25,000 at 3 months. That's not really our target that we're looking for. We're looking for somebody that puts in just that little bit more, but please take your time, and it's fine. You know, you may put a toe in the water, come and understand the business model, and if you choose to, only if you choose to, you can add to that investment, providing that we're still taking on new money. And you can have also multiple investments too. So with that as well. But with the multiple investments, they're individual. So you can't pool that to get to like a $500,000 limit. I will say though, is as interest rates have come down over the last, say, 12 to 15 years over time, you know, we stayed true to those fixed interests amounts that we had with our investors. So even though they were a higher amount, we could have refinanced that out, we stayed true. And it's the same thing. Let's just say you did invest tomorrow and you invested at the 9.5% rate, but then we decide in say, and it's a 36 month, and in 18 months time, let's just say our rates are 10%. You can add to that investment to reset that term, providing what our interest rates are. You understand? Good? Yep. Referrals. There's a reason why I'm standing here today, because I've had the backing of all of you, but you've been able to refer other people to our company. Referrals are an important part of our expansion. So we welcome you to refer anyone whom you feel may be interested in an investment in our company, and we value your ongoing support, and I will not let you down. My family won't let you down. Thank you very much.
As Jamie mentioned, I'm the COO of the company. I'm the very proud COO of the company. I think as you've gathered from the discussion up here, there's a lot of pride in what we do, and there's also a lot of trust that I think we're trying to bring to the broader market. I'm very, very aligned to those principles. I have a fairly broad role. COO touches a lot of the business front to back, but fundamentally my role comes down to making sure we run the business efficiently, we run it at scale, and we run it in a controlled environment. Right, we process thousands of transactions every day, and we need to make sure that there's limited risk there. So very good to meet you all, and looking forward to a long, long relationship together.
Questions? Bevan, you got a question? And it's okay if you don't have any questions, because I've got lots. Armando, we've got a rowboat. We've got lots to do. I'll pass it over. Where are interest rates going to head in the next 6 to 12 months, if you were to have a stab?
I would say that I'm not an economist. Can I just put that out there first and foremost? But I do think that a couple more rate rises seem to be where the narrative is going. I think it's also important to note that they're pretty good at getting it wrong. If you look back, the economists have got it wrong more often than not these days. But I think it's fair to say that a couple are going up. But one thing that Jamie mentioned about is that, and what this is a delicate balance that we've got to play, is that if there is a challenging environment that's ahead of us, what does that typically mean? That means that an expansionary measure is come in and interest rates come off. So we're just got to play a bit of a waiting game as long as we can. And we're doing that with our customer rates as well. Some of our competitors are increasing their rates recently, and we've held firm. So we're trying to keep our powder dry for as long as possible until such time there's a bit of a clearer direction of where things are going.
You had one job to do, Bevan.
How's that steak going?
Yeah. Hello, guys. Thanks for inviting us along as investors. I just seen one thing, and I'll ask a question about it, but and I hope I've read it correctly. But I was just looking previously at the bad debts. $11.8 million, is that correct? And then that indicated something like a 31% increase. Am I reading that wrong?
No, not at all.
Okay.
So let's beautiful question.
Great question.
I knew you were here for a reason. So let's look at that slide. We've got to get back, because obviously Darren was quite good. There we go. That's including our growth in the provision for doubtful debts. So remember, not only your write-offs, but it's your provision. So we set aside money and capital to increase that provision as well for doubtful debts, as well as our write-offs, especially when we're doing mortgages now. So we're growing that provision, so that's part of that. What you've got to do is look at two slides in conjunction. So not only that slide, but then we come to our actual arrears, which shows you the story that Darren touched on, which is a trend line that is going down. And you focus on a small amount of growth in arrears. We'll touch on that too, because that raises another good question, but you'll see that trend line coming down. We were really purposeful here about changing our business model, because we felt something was going on in the economy back in 2024. We didn't know what it was going to be, but we started that cautious approach there. And you'll see it trend down. And see how it's come back up? It always comes back up during that period of time over Christmas. So you can see how it spiked again. So when you see the 30%, because we're allocating and making sure that we're well provisioned and well protected for the next economic shock.
I think further to that, we touched on not being a listed business. A typical listed business would make that decision as, do I want to put that money aside because I want to keep the profits a little bit higher. So that's where Jamie and the board were very disciplined to say, look, we're not happy, but we're comfortable with that half-yearly result coming in line with last year to ensure that there's money being put away. We could have easily taken that provision back and then added that to profit, but we didn't, and that's maintained that discipline. So that, as we go through this next phase, what we're basically saying, the business is well protected for any shocks that may arise.
Yeah, I'm going while the mic's coming over there. When did the Iran conflict happen? 4 weeks ago? 5 weeks ago? What happened? What did we see? So straight away we saw a lot of customers ringing up for a payment arrangement because the fuel prices were going up. There was this, which is fantastic. Do you want to talk about that?
Yeah, well, Leanne's probably, if I bring Leanne up the stage, but I won't. But it's okay, I won't, I promise. No, we had a lot of customers preemptively saying, look, I think there's going to be some challenges in front of me. I'd like to go on the front foot and put a payment arrangement out there, right? So they were flagging that potential issue there. Whilst that was, in some respects, music to our ears because it enables us a chance to work with them, right? All we need is time, right? So we can show that discipline through time, working. If someone's prepared to back themselves and be upfront with it, we have a great track record of working with customers through the whole cycle. So if they're committed, we'll allow them to go through that various cycle. Some of those arrears will go up, and who knows where they may go. But if they are prepared to trade their way through those difficulties, maintain their employment, there's absolutely no reason why that won't come down in the future, right? So, but fuel prices are real. We fund, obviously 70% of our book is cars and finance. So that fuel price stuff is real, and that's what we're looking at it very, very closely. We talked before about how much we have huge amounts of data available to us now. Why that's good is because it allows us to look at our portfolio. Instead of saying we've got $700 million worth of loans, it's what is the composition of those loans? Are there industry sectors that we're more exposed to? Is there states or regions or asset types that we're overexposed to or underexposed to? So with that data brings knowledge, brings opportunities for us to rebalance our book, right? As instead of waiting and going, I hope we're getting this right, we can proactively change our credit profile and our credit appetites to buy the business that we want to buy to trade us through what the next phase would be.
Which is exactly what we did in 2024. And that's why you saw that coming down from that trend line as well. Yeah. Thank you.
Oh, I have to stand up. We're new investors, but are you treating the economic situation that we're in at the moment a bit like COVID? I know as a small business owner, I'm feeling like we know it's happening. It started and we were a bit like, it's just a flu, just a bit of fuel prices. And then a couple of months in, we started to get really nervous. And I'm feeling like this economic situation we're in is a bit like an economic COVID.
It's a great question. I don't know the answer yet, and the reason I say this is that early doors in March we saw a softening as such in regards to lending amount of loans and applications. But the back end of March was a little bit different. It started to go up a little bit, and April so far has been okay. So across the sector, most of our competitors and the broader sectors was reporting about a 20% reduction in deal flow in the last few months. So that's a real number. That's not just small. That's a genuine reduction. So there's absolutely no doubt that what it's doing is making certain people question whether they need that next asset. That's a real thing. But as for how long that lasts, I think it's too soon to know. But it's one thing's for certain is what we are looking for is what we've seen is our commercial business has held up quite well, but the consumer segment has been a bit softer. So what that tells me is the consumer who just wants to potentially upgrade their car is thinking maybe this is not the right time. But a business who still wants to trade their way through this period still needs to have assets to drive business growth forward. So yes, it's come off, but not to the extent that we feared it was in early March. But again, it's a bit too soon to say.
COVID was a litmus test for the business because there was there's way more uncertainty back then with the COVID than it is today over what we're seeing. But it was great because so many people just called us, wanted a payment arrangement, and we entered into it. And you could see how we carried those people, where it went from to during COVID, and we just worked with those people over a long period of time. time is all you need through those circumstances. Yeah.
I think it's fair to add our position as a business versus COVID is worlds apart. Our access to funding and liquidity with those additional institutional funders, as well as your support, puts us in a very different position. We have a lot of buffer built into that. I think in addition, that equity base, which continues to grow, and as you've seen the level of buffer that you all have, us as a business, we are far more secure and far more stable than ever before. So I think we've spoken about some of the opportunities that may still come out of what is happening now in the market. I think there's going to be tough times ahead, but certainly a lot of great opportunities which we could capitalise on.
Any other questions? So, why did you join our organisation, Jason? You came. Why did you leave London?
I left, fundamentally we left London because we wanted a better family lifestyle. All of our family was based here in Queensland. For what we've looked for as a lifestyle, it's delivered in spades. If I'm honest, I've been very lucky to fall into the Investor Central group. I wasn't certain of what I was going to move into. I wasn't certain of the market. What I liked about what I saw from Investor Central was the longevity of management. I liked the fact that management had their own money in the company, which meant there was that genuine buy-in. And I was really impressed. I was impressed by the motivation. I was impressed by the drive that I saw from all the leaders. And now that I'm on the other side and in the firm, I continue to be impressed and continue to be motivated. So really looking forward to the future.
Thank you. No other questions? So tea, coffee and dessert. My wife's favourite thing in the whole world is dessert, and it's coming out now. If you do have any questions, we've also got Ashish and other leaders within our organisation here. Please ask any questions, bail these guys up. But I just wanted to give a shout out because some of our team members are here from the Townsville office. They are the everyday heroes that make us look good. So they're the ones that keep turning up, are accountable, and are absolutely a delight to work for. And I appreciate all of you. Thank you.